Let's get right into this. The Dow is in that frothy range again, and although there are new all-time highs being made, let's take a look at the volume. In this area right in here, the volume has come down quite a bit, but in terms of the last month or even longer, the volume is way down, and that just is because traders are not sure what to do when we get to all-time high. But let's go back a little bit. If you look back here in the beginning of March, we had a pretty solid run-up, and as we had that run-up, the volume was decreasing pretty steadily. And of course, the next thing that happens is we have a decline. Then the volume picks back up as traders are buying the dip. As it starts getting up to this little frothy area, notice the volume declines. So you can use that to your advantage to help you determine when to get in and when to get out. It may bounce, and most likely it's going to go a bit sideways or go down a little bit and meet this line at some point, maybe in the next couple of weeks. So you can get in on the bounces, and then when you notice the volume decreasing and it's getting a little frothy up there, time to get out. Now let's take a look at the Nasdaq. The Nasdaq has also had this long-term trend with bounces that are right on the money, and we had this more recent pattern develop, which I've been talking about the last couple of weeks, a symmetrical triangle. And it is a textbook symmetrical triangle. We have solid touches forming a wedge here. You have bulls and bears both not sure what to do, so you have lower highs and higher lows, which ends in this wedge here at the bottom. In this case, we had a very strong breakout, and we've had a lot of gain here. We are definitely past the point of it being a fake out. So I'm going to get rid of this because we do not have a fake out, and we've had some very solid uptrending days on decent volume. Again though, if you look at the volume down here, the volume is declining overall, but the volume where we're ending is pretty average. So your diehard traders are like, yeah, this is exactly what we expected to happen, and we're staying in. Would it be more bullish if we had double the volume? You bet. But we don't need to have double the volume. We just need to have consistent, strong volume, which we have. We didn't have crazy volume like we did back in the beginning of March, where we had a really substantial decline. That's a lot of people taking profits off the table and deciding, this could turn into a major correction or even a crash. And then a few days go by and the panic and worry subsides, people start buying the dip, and all of a sudden you have a new uptrend. And that we keep seeing over and over again. It's just a recurring story. The trick is to know when to get in and when to get out, and using technical analysis can be a very powerful tool for that. All right, checking in on the S&P 500. The S&P 500 is giving a little bit more of a troublesome technical pattern here. I warned a week ago and even a couple of weeks ago that even if we get highs, that's great. We were in all-time highs, that would seem to be bullish. If it hits this resistance in the top of this megaphone pattern and then starts to come down, that's a very bad sign, because the megaphone is the opposite of a symmetrical triangle. In this case, people are wildly varying in their opinion. You have higher highs and lower lows. That's the exact opposite of a symmetrical triangle. And right now, it's possible that we're just getting higher highs, and that's great. That's very bullish, and the volume might support that. The volume is a little under average. If it is a megaphone pattern, then it may very well decline, and if it declines, a few percentage points, that might spook people enough to think that this really is a megaphone pattern and cause a major correction in the S&P 500. Keep your eye on the S&P 500 to make sure that we aren't in a megaphone pattern. If it breaks through this top resistance, then it will essentially nullify the megaphone pattern. So let's look for that. Be patient on the S&P 500. See you next time.